In this video, I will show you the 5 steps you should take to reach 1000 in monthly dividends with dividend investing and how you can get there faster in 11 years and less than 100k of your own money invested. At the end, I will also show you some companies that could help us reach that goal. Are you joining me on the challenge to 1000 monthly dividends? Hi, I'm Tom from the Dividend Attitude. I currently earn about $430 in annual dividends, so today's video is also part of my own quest to get to 1000 in monthly dividends. So I will use much of my own situation as well to show you how it can be done. Enjoy! Before we can answer the question of how much money you need to have invested in order to earn 1000 in dividends per month, I would suggest you to follow the 5 steps outlined in this video first, to get to your goal faster. And that starts with step number 1. Understand what you are doing. What is dividend investing exactly? It is investing in companies, stocks that pay out a dividend. Dividends are excess cash paid out by the company from their profits. A way to measure how much of those profits are paid out in dividends is by looking at the payout ratio. This is simply by looking at the earnings per share, or EPS, which you can find on most websites that cover and analyze stocks, like here on Seeking Alpha, and then dividing the dividends by that earnings per share. Now, there are multiple payout ratios. Besides the payout ratio based on earnings, like we just looked at, there is also the free cash flow payout ratio. Another important term is called the dividend yield, or the interest rate you would get based on the amount in dividends that is paid out annually and the current stock price. So unlike interest rates from banks, which are somewhat fixed, the interest rates or yield fluctuates all the time based on the current stock price. Since we want 1000 in dividends, it is better to pick companies with a higher starting yield but also decent dividend growth. Be aware of falling for the dividend yield trap though. More on that later. My personal sweet spot is between 3 and 5% dividend yield and 5% annual dividend growth. I will show you in step 4 which quality companies fit that bill. So now that you know the very basics of dividend investing, the question is, do you know how to analyze a company and look at its financials, management, their competitive advantage, and so on? If the answer is no, then there's no way you can get to 1000 monthly dividends and you better just give up. Just kidding, of course. That is why ETFs are invented. An ETF is basically a basket of stocks combined into one. So it is like buying one stock, but this one stock represents multiple, often hundreds, of stocks. The advantage is that you don't have to pick individual stocks and the risk that comes with that. And it saves you a lot of time on research. Since our goal is getting to that 1000 in monthly dividends, I would pick an ETF that pays a decent dividend yield and has good dividend growth. And then step number 2. Make a plan and set intermediate goals. Step number 2 is to make a plan and set intermediate goals to keep it interesting for yourself. Don't worry if you are starting out small, I'm right there with you. Currently I can only invest $130 per month in dividend stocks. Does that stop me from wanting to reach that goal of 1000 in dividends monthly? Absolutely not. I will give you an example of my personal goals in dividend income so you have an idea to make your own plan as well. My first intermediate goal is to hit 500 in annual dividends. Right now I'm at 427 annual forward income. So that is definitely in range. I achieved that in a bit over 3 years with consistent contributions and putting leftover money in dividend stocks. So that is very attainable for everyone. The next goal is to hit 100 in monthly dividends, so that is 1200 per year. And then 200 in monthly dividends, 300 and so forth. You get the picture. It is still a long way towards 1000 monthly dividends, but that's why I'm saying take it step by step. And don't worry, there's actually a little trick that will help us to get to that goal faster, which I will tell you more about in step 5. And then step number 3. Allocate sufficient money to investing. When I talk to friends or relatives about investing in the stock market, one of the most common responses is, I don't have money to do that. Because there seems to be this misconception that you need to have a lot of money to invest in the stock market. Especially in today's day and age, that couldn't be further from the truth. You can literally start with $1. Buy a small piece of a company with a fractional share and it doesn't cost you anything. If you're from the EU, you can start on Trading 212 for example. Also see a referral link in the description if you want to get a free share. The important thing is to start and to make investing a habit. I automatically transfer money to my broker every month, straight after my paycheck comes in. It helps to make a spreadsheet for yourself where you write down your monthly income and expenses. If you know how much you are spending and on what, then you can start to cut back on unnecessary spending and allocate that money towards investing. A good rule of thumb to start with is to invest at least 10% of your net income and gradually build that up by either cutting back on some expenses or starting a side hustle to increase your income. What I did is cut back on energy bills, insurance bills and so forth just by switching to other companies. What I also did before I started this YouTube channel is to do user testing as a side hustle. I had to test out apps and websites to see if there were any bugs and so on. Because testing is part of my day job, this enticed me the most. But there are plenty of other side hustles you can do. And please don't come up with the excuse that you don't have time, because it is all about priorities. And then step number 4, buy quality companies. So step number 4, the fun stuff, buying shares of companies that pay those lovely dividends. But all too often I see people that are chasing high yield companies and they get burned. Why? Because a high yield means the stock price is low compared to the dividend they pay out. And that usually has a reason. Because if the company would be doing well, then the stock price would be higher and the dividend yield would be lower. So what do you need to look out for? There are a lot of things you can check, and if you want to know what things I look for in a company, I suggest you to check out my playlist on researching and analyzing companies, which is now suggested in the top right. Let me give you a quick crash course here. First thing I like to check is the revenue to see if that is growing. If a company is not growing its revenue, it will eventually run out of money to support the dividend with. But revenue is not the money a company can keep in its pocket, because they also have costs to make their products or services. After deducting all the expenses, we end up with the net income, or earnings per share on a per share basis. And then look at the forward annual dividend. So that is the most recent dividend paid out times the number of times the company pays out a dividend. Usually quarterly and sometimes monthly. From that we can determine the amount of profits a company pays out in dividends, which is known as the payout ratio. Like I explained in step 1, I prefer to look at the free cash flow payout ratio. Next, I want to know how healthy the company is by looking at its debt. I specifically check the debt to equity ratio. Companies with lots of debt can get in trouble when times are tough. And when times get tough, the dividend is likely to be cut. We don't want that as dividend investors that want to get to that 1,000 in monthly dividends. As an investor, I also would like to know how well the company is doing with the money I give them as an investor. This is called the return on equity, and it tells you how much return the company made with the money given to them by people investing in the stock. Equity. You are likely to have heard of companies like Microsoft, McDonald's and Coca-Cola. These are all companies that have what is called a sustainable competitive advantage or a moat. Most of these companies have several competitive advantages and one of them is brand recognition. It is important to invest in companies that have a wide moat because this prevents competitors from taking over and taking their profits. And then, last but definitely not least, the dividend history. For how many years has the company already been increasing their dividends and have there been any dividend cuts in the past? Remember, you are looking for reliable dividend-paying companies. So now, the little magic trick I was talking about earlier to get to that 1,000 per month in dividends faster. It is called the compounding or snowball effect, and that will help you on your way to 1,000 per month in dividends faster. You might have heard of it, and if you haven't, pay close attention. In plain words, the compounding effect is interest you earn on your interest. This happens when you add the interest to your principal, making that principal bigger. With a bigger principal, you earn more in interest and the interest will grow exponentially. You might have experienced it without even realizing it if you have a bank account that pays interest. The same concept applies to quality companies that pay sustainable dividends. If you reinvest those dividends, you will get more shares of a company. And those shares will spit out dividends again as well. And this will continue and start to grow faster and faster. Where it really gets interesting is if we do add extra cash and we add the growth of dividends into the mix. You see, there are quite some companies who not only pay out a dividend, they also increase it every year. Companies who have done that for 25 years or more are called dividend aristocrats. And companies who have done that for 50 years or more are called dividend kings. These are companies like McDonald's, 3M, Johnson & Johnson, Realty Income and so on. Now we are ready to answer that one question. How much do we need to have invested to earn 1,000 in monthly dividends? With an average yield of 4%, which is very possible, you would need to have 300,000 invested. But don't forget the little trick of compounding. If I take my own situation about a 10k starting portfolio, my yield on investment, also known as yield on cost, is 4.3%. But let's keep it at 4% and I will reinvest all dividends. With an annual contribution of $2,000, it would take me 15 years to reach that 12,000 annual or 1,000 monthly dividends. But look at what is happening after that. With just 3 extra years, that has doubled to 2,000 in monthly or 24,000 in annual dividends. And in step 3, I, just like you, made a plan to increase my income over time and cut down my expenses. So I actually expect to be able to contribute at least 500 monthly after I've paid my debt down, plus some extra contributions here and there after the second year. And again, increase that contribution to 10,000 per year after 3 years. The math to calculate this with incremental increases gets a bit complicated, but already with 10,000 yearly contributions I would be able to get there in about 11 years. You see 8 years in this calculation, but that includes the first 3 years with less contributions. And again, after 3 more years that has doubled to 24,000 annual and 2,000 monthly dividends. 3 years more and we are at more than double that again at 50,000 annual dividends, or more than 4,100 monthly dividends. How is that for retirement? The big difference between the 300,000 that you would need to get 1,000 monthly dividends instantly and this is that you need far less money because compounding and time did its thing. Actually close to 100,000 invested over time only. And before I get any comments saying, "But Tom, you didn't count for inflation or taxes, this is just a fairy tale calculation." How's that for a Graham Stephan imitation? No, I didn't. Because 1, it is very hard to predict inflation over a long time period like that, and 2, as a foreign national, I would also have to account for currency fluctuations. So I decided to keep it simple. As for taxes, I don't pay any taxes on the dividends I receive as a Dutch national. So who cares about taxes, right? Before you all plan on moving to the Netherlands, we do pay taxes on our net worth over a certain threshold and we have higher income taxes. So which companies would fit that bill right now? These are by no means recommendations and I would obviously need to dig deeper into the companies to see if they would fit me and my goals. But on the surface, these companies have above a 4% yield and more than or close to 6% dividend growth. The first one is AbbVie, ticker ABBV. I know this is a very popular biotech stock with a current yield of 4.5% and a 1, 3 and 5 year dividend growth rate above 10%. Altria, ticker MO, talking about a favorite among dividend investors. Altria has been a favorite for a very long time. Personally, I'm not a fan, but it does offer a yield of 8.5% right now, and the 3, 5 and 10 year dividend growth rates are all above 6%. And then Franklin Resources, ticker BEN, BEN. A financial company which is currently yielding 4.84% and has a 3, 5 and 10 year dividend growth rate above 10%. And then number 5, Enbridge, ticker ENB. A utility company for less volatility currently yielding around 7.7% and with a 1, 3, 5 and 10 year dividend growth rate as well above 6%. I've actually covered Enbridge in previous episodes, so if you want to know a bit more about Enbridge, check out the video now suggested in the top right. Number 6, Store Capital. And of course, Store Capital can't be missing in this list with a current yield of 4.28%. Their recent dividend growth rate is a bit below 6% at 5%, but their 3 and 5 year dividend growth rates are above 6%. If you want to know more about Store Capital, I did a side-by-side review with Realty Income on Store Capital in episode 33, now suggested. And I will actually do a future video on Store Capital alone as well, so stay tuned for that one. Remember that the goal is to have a portfolio yield of above 4% and more than a 6% dividend growth rate. So some individual companies can have lower yields and higher dividend growth rates and the other way around, as long as they are quality companies and fit your personal situation. So there's one question left to answer. Are you going to join me in my quest to reach 1,000 in monthly dividends? If so, comment, challenge, accepted, so I know who is with me on this journey. I hope you enjoyed this different style video, and if you did, consider subscribing. Until next time, bye bye.